joining us for part 2 of Navigating Your Cash Flow. With me is Nicole Prevost, who is a senior business consultant. We really appreciate your expertise and your guidance as we move through this webinar today.
Looking forward to it.
Absolutely. And it's a senior business consultant for Chase for Business, covering Northern California. She is intentional and accelerated in 2010. Nicole has held a variety of roles, including marketing, finance, and corporate responsibility. She has been significant partner in implementation in Oakland and expanding the firm's $75 million philanthropic commitment to the Bay Area. And so, as you all know, for those of you who were here the last time, she is just ablaze with all kinds of information for us. And so again, thank you for joining us today. Just a little bit about this particular Chase Advancing Black Entrepreneurs program. We've been working this program since mid-2020 with the ability to provide information, advice, tools, and resources to our businesses. And so this particular webinar, Navigating Your Cash Flow, is one of 6 that we offer through the program. And this program is also a partnership between ourselves, US Black Chambers, and 3 other organizations, the National Urban League, Black Enterprise, and the National Minority Supplier Development Corporation. And so we work together to ensure that Black business owners have access to advice and resources to help you succeed in the long term. What I'd like to do now is just ask if there are any questions from the last webinar that we had. Feel free to put your questions in the chat or raise your hand for us to answer them quickly before we move into the essence of this part of the program. We did parts 1 and 2 last month, and this time we're doing parts 3 and 4. And you'll see in the chat some information that I've Philip Dunn and Lisa Carter working behind the scenes with us today from USBC. So you'll see some stuff coming through to them as well. Nicole, I'm sorry.
No, I was just going to say there's no question too small that we can answer for you before we get started on this part 2.
We'll wait a couple of minutes. Starting on page 14 of your workbook, which is part 3, minimizing cash out. So if you want to turn to that, to follow right along with us. And so no questions. I'm going to have Lisa. So today we're going to talk about pricing. If you remember, identify your customer base. We talked a little bit about customer segmentation. Nicole, anything else you want to add in terms of sort of our focus on one
flow analysis tool? So we were able to really show and highlight how you can put some of your inputs, the inflows that you're getting from your business into that analysis tool so that you can actually see the trends for your business over time. And the same will go for part 2 when we think about the outflows as well. So that tool was something that we highlighted so that business owners can walk away with something tangible that they can use on a day-to-day basis.
That's absolutely right. And so we'll just get to it. Let's move to our first slide. And so, um, when we're talking about understanding, where your cash is, when it's going out, it really can help you right size your spending, because we know that habits change, there are costs shifting all the time. Competitors are always going to attempt new strategies. And so we need to have a way of being able to manage through that. So it's critical to your spending with the cash flow analysis, which I think is a great tool to be able to um, analyze, make different costs and expenses and revenue to really get you on track with what it is that you want to do. Those things really help. And so a lot of times you can reduce your expenditures around 5 different ways. You can reevaluate your vendor relationships. You can build a high performing team. You can take a fresh look at real estate. If you own that, you can control your spending based on your inventory, and you can get real value from marketing. And so a lot of times it's about putting your the expense categories in the right place, right alignment of funding to be able to make a difference in the growth of your business. Next slide. So what does that mean? Bottom line, pricing that's going to be attractive to your customers. And so there are some ways of doing this. You bundle items and services. A lot of us have seen that the BOGO kinds of offers. You can put discounts on for large orders, or you can have favorable payment terms for longer commitments. Nicole, do you want to give some examples about how you may have counseled your businesses in this space?
Absolutely, absolutely. So the one thing I was actually going to say is during part one, we talked about the customers. What are your ideal customers? Who are coming back to purchase your products or your services? And then who are you actually trying to reach when it comes to your business as well? So one thing I would love to just share more about is the favorable payment terms and longer commitments. So a lot of times business owners are getting paid, let's just say on a net 60 or a net 90, right? Which is a little far out when it comes to your cash flow. So we always have really recommended, if customers are willing to pay now, or let's just say within that 15-day time frame, depending on your business model, I would say. Or one thing that I have seen with some of my other business with, I have a beauty company that I work with. So she typically provides like a free item. Let's just say it's like a free chapstick, a free body butter when customers actually pay now and within that 10-day window, because then it gives them some incentive to say like, okay, I actually see the value now, I want to pay. So I would just say, what can you do for your particular business that would allow your customers to give you the funding right now for what you're providing? The longer you wait, the less likely they are to actually pay. We don't want that to be the case, but we also want to avoid a cash flow crisis. So think about your business and what can you do to incentivize those customers.
Yeah, I think that's a great point. And again, that cash flow analysis tool that we're going to bring up a little bit later, I think helps a lot in that, right? Because if you're anticipating when you're going to get these payments in, if it's really not working for your cash flow, it shows you right away how to be able to correct that. And just as you talked about those changing terms, maybe it's, from 60 to 30, or it's 30 to 15, whatever that might be, it's going to have a direct impact.
If I could also add one other thing, when we think about financial institutions, if you have, let's say, receivables that are past net 60, typically we do not see those receivables as something that you are going to collect on. So although the discussion isn't going to be around like capital today, but think about cash flow is one of those components to securing capital that you may need for your business. So if you have something longer than net 60, that may not even be viewed as something that you are going to collect on as a business owner. So it also helps you to have shorter payment terms, so it can open up the options you have for obtaining the capital you need for your business as well.
No, that's a great point. So we're going to move to the first area of where you can reevaluate your vendor relationships. So as we move to the next slide, a little bit about ways you need for your business, right? A lot of times we've been, this pandemic really has everybody thinking on their feet much more consistent than they need to before. You really got to move and change almost on a daily basis sometimes, depending on what announcements are coming out, what the external environment is looking like, what is inflation looking like. All of these things you're taking into consideration, right? And so for your vendors that you've bought your inventory from, right, you might need to negotiate more favorable terms. So think about this from the standpoint of, has your business changed? Is your cash very important tool to look at? So we're going to look at an example of that very quickly. I'm going to come back to that sheet. Let's go to the next slide. I believe it's, yeah, Moss Place. So this was a small takeout restaurant that used a lot of containers, utensils, napkins, and they were able to get a better price on those products by placing monthly orders. So again, going back to Nicole's point about how do you keep a return customer or someone who's buying in bulk, what are the ways that you're able to do that? And this customer was able to do it this way. So let me tell you about this story a little bit. So Mia Lapong taught her to cook, served hundreds of takeout orders a day. She always had cash flow troubles though. Even though the rent was relatively low, she didn't have many employees. And so she decided to dig into her expenses and found that her most frequent vendors and her biggest cash payments were for food ingredients and paper products. And so she decided to focus on those products first, on the paper products first. Before reaching out to her vendors, she researched paper product vendors in her area, ranked them based on the values and the features that they had, and also looked at her ordering process so that she could determine when the best time to order products was. If she was ordering irregularly, was that going to be more of an expense for her? And she, noticed her patterns in how she was buying. And so once she looked at that, she contacted her vendors to ask about lower cost products and proposed making a regular monthly order in exchange for a better unit price. And so her top vendor agreed to do that. She now spends less and her expense is more predictable. So she knows when she's going to be paying every month, and she's paying less than what she had done before. And she significantly improved her cash flow without having to sacrifice critical vendor relationships. So Nicole, I know that you have an example around that as well. When you talk to
Yes.
people you work with.
Absolutely. So the first thing I like to tell business owners is, how long have you had that vendor that you're working with, and has it been over 1 year? And have you paid on time each time? So I say that to say, I ask the business owners to really call upon the integrity that they've built with that vendor and make sure that they know moving forward that vendor may be the preferred person that they're going to be going to on a continuous basis. Now, I say that because that is the same prompt I give all my business owners, and I can tell you it saves them hundreds of dollars initially, and then over time, it's thousands of dollars. So if you have that good relationship, which we always recommend, you start off on a good basis, you're paying on time, then you want to call on that so that you can say, hey, since we've built this trust with one another, I now want to reevaluate this so that I can show you what I'm planning to do and where my in return getting consistent sales from the purchases that you're making. So that's the question I throw out to all business owners. Has it been 6 months to a year? Have you paid on time? And if so, it's time to call on that relationship and reevaluate now.
So I'm going to try to share my screen so we can look at that vendor analysis sheet. Here we go. So thumbs up, Nicole, if you're seeing that sheet. Terrific. Okay. So this sheet is a great sheet for you all to use as you're thinking about how to evaluate the spending of your relevant vendors. So you can see that there's instructions here. And then they have something called the vendor opportunity analysis piece, where you're putting in your vendor name. So if you remember the example we just talked about with Grandma's Place, she literally went back and probably researched about 5 vendors to determine what her spend was with them, what their potential was, or the size of the vendor relationship, what were the current services she was buying. She rated criteria. You can see here. Once you put those in, it gives you a weighted score, and then you can do what your potential action looks like. So I'm just going to show an example, and I'm going to have Nicole sort of walk us through a couple of them.
That is perfect. That is perfect. So as we think about that first vendor that we have here, it says vendor number one. So you want to put that vendor name. We could leave it as vendor one. Um, but the one thing we like to encourage everyone doing a lot more than you need to once to your particular product or service. So the next point here is your current annual spend with that vendor. So don't leave anything out. How much are you spending with that particular vendor? And let's just say it's $36,000 right now. I would also like to recommend think about what your annual spend is going to be in the future as you have that conversation with that vendor, so you can have that data point. I've spent 36,000 with you for 2021. Now looking for full 2022, I can anticipate it's going to be 50,000. As we look at that next point, it says small, medium, large, or potential vendor. So, oh, sorry, there was a quick echo there. So, is this a large vendor? Is this your top vendor? Or is this something that maybe a smaller vendor that you only buy from periodically? So maybe the purchase quantity or the purchase frequency is not as high. So just really listen out your vendors from largest to smallest, because those are the ones you want to tackle at first, is your larger vendors when it comes to those conversations. So next we have our current service or product. So what are you purchasing from that vendor? This also evaluate if you have any duplication. So maybe you're purchasing a couple of items from certain vendors and it's the same. You want to make sure that you're not duplicating your business owner. And then I would also say this is good for you to actually evaluate maybe the pricing. Maybe another vendor might be better, and you can, I would say, leverage that. Go to another store, let's just say Target. You're like, hey, I noticed that this was selling at another place for $5. Is there any way you can match that? So this also gives you, I would say, as a business owner, the leverage to go back to those vendors with real data. So this is really an evaluation to see how good of a quality relationship you have with that vendor. So is the quality one is not so excellent? The price, how is the pricing? Is the pricing excellent or is it not so excellent? And then the same goes for the timeliness of the delivery. So this is really a quality factor to say, this may not be the best vendor I need to spend most of my time with. So this is really just your tool so you can evaluate all your relationships, because to be honest, as a business owner, we're busy. It's hard to remember when you think about all vendors you work with and which one is really at the top of your list. And then it gives you a weighted score. So that weighted score allows you to say, all right, this is our top vendor. This is at 24. We should really spend more time with them. And so then that last piece of this vendor analysis is just like your actions and your contact information. Now, I think this part is critical because you don't always want to be the person that is doing this all the time for your business. It's good for you to actually start it out, but at some point your business is going to grow, it's going to scale, you're going to have employees, you're going to have other partners, and you want them to have the tool already in place so that they can make those decisions as well as you move to higher elevations within the business. So we always recommend that you have this so that you're not the sole owner of all that information. And if you're out in any way, you're traveling, whatever the case may be, someone else can still pick up the ball for you and make sure that it still moves forward. So this is really our vendor analysis piece that gives you the tools, the information, and the forward-looking actions on how you can evaluate that relationship. And we're always happy to take questions.
Yeah, I would agree with that. And as I'm looking at these top two, obviously there's opportunity to negotiate, right, between these two as well. Like which one of these might get more business because you're able to get some discounted amounts. So another way of being able, they're kind of close in terms of their weight. And so how do you leverage that to be able to have it benefit your company? So any questions?
And while we're waiting on questions, I mentioned this a little bit, but have you ever told vendor number one in this example here that, hey, I have another vendor that I'm working with, vendor number two, and this is the pricing that I'm currently getting. Are you able to match that? Because I anticipate an increase in volume and I really like what you provide. I mean, to be honest, like we do it in other places of our business. I mean, in our life, we should be doing this for our business as well.
So any questions before we move on? And again, this is an Excel sheet. The formulas are already there, so you don't have to think about doing anything except plugging in data and information. That's it. It's that simple.
Even better.
Absolutely, absolutely. So I'm going to stop sharing. We're going to keep moving. You can feel free to come back if you do have a question, and we'll go back to the PowerPoint. So as we move to the next slide, we're going to talk a little bit about the other ways, and we'll move through this a little bit more quickly. But I really wanted to share that tool with you. I thought that was an important, that's why this particular session, these two sessions have been so important, because there's some really great tools that can really help you, and they are free. High performing teams. So again, evaluating which staff members are needed for essential tasks. What tasks can you automate? What tasks can you cut back on? What can be outsourced? What can you delegate? There might be things that you're doing. I think Nicole just talked about that. You could be traveling or other places, but you've got a trusted, accounting person who can take on the role of some of these areas in terms of helping you evaluate your costs. Are there gaps that can be filled by a contractor or an intern? And is it seasonal staffing an option, right? There are ebbs and flows to our business. We know, for instance, let's just talk about retail, real critical period where most businesses make their money is the holiday season, right? The Christmas holiday season. And that's like toward the end of the year. So they're going all year long, right? Might still have sales and things, but it's really that end of that year that's really that crunch point. So at that point, that's where they want to increase their staffing. But during the year, they might want to be a little bit leaner. I'm sure a lot of you have seen holiday staffing requests at some of your retail locations. That's why, because that is the busiest time of year. So they don't keep the same level of payroll all throughout the year. It gives them an opportunity to be able to move through that effectively, but to also manage their costs.
And if I can just add one really quick tip, is there's a particular business owner that I was working with, and they have a communications person, which is important for their particular business because they're in marketing. And this communications person had to take on all these additional tasks, and they were actually paying this person all this overtime, and realized that they needed to outsource the fact that they needed someone else to do their social media posts. And so I just say that to say, like, what is the cost analysis for what you're paying for when it comes to your employees? If you have employees that are going outside of the spectrum of what they normally do, you're going to be paying them a lot of money, versus if you were to just outsource that one thing to get that done in a quick and efficient manner. So it may be better to outsource some things for your business, especially if that's not your area of expertise. Don't try and go outside of what you're really good at, because that can detract from your actual core business. So I just had to share that because I've seen that quite often.
No, I think that's great. We've got two questions too before we move on to the next area. Where can you find the sheet for the vendor analysis? We're going to send that back out to you after this session. So you will get, we usually follow up our sessions with information for you. We will put that Excel spreadsheet in the email back to you.
And I think there's a link in the workbook too. So if you have the workbook, there will be a link in there for you to also click on.
So I don't know if you printed out your workbook or if you're looking at it online. If you're on the page, I believe it was page in your notebook, I think it's page 14, but I'll go back and check in a minute. And since Jerome is asking that question, I'm going to answer this live, Jerome, for you. So let me just check, because right now we're on page, in your workbooks, we're on page 15.
Yep,
But I
and
believe
and
that
it's on
vendor
page 16.
page
The,
16.
yep, analyze your vendor relationships. It's on page 16, and it says visit chase.com/vendor analysis.
Yep.
You click on that link, and that takes you to where you need to go.
Okay. All right. We're going to move to the next area where we can save some costs. Real estate. And again, I believe you're on page 15 at this point. We will share the link in the to the workbook. Yes, I will share it in the chat for you. So real estate. Sometimes you have to really examine if you're leasing or if you really need to own, because there are times where you might be paying more out in rental space than you would be paying out if you actually own the building and could be able to deduct, depreciation expense, taxes, really gain some benefit for your business as being an owner. So those are the things that you do need to look at. There are times when you can renegotiate your lease, and there are times when you can't. So again, it's about, exploring those as cost-saving options. Next slide. Spending on inventory. Inventory ties up cash. If you bought inventory and it's not moving, then you're not realizing the cash that you have invested in that inventory, right? You want people to buy your product, right? So it's important to have the right amount. There aren't times when you necessarily want to have every single product you have on a wait list. But there might be, some high selling items where it might be okay, as long as you know you can get that inventory in quickly. But you want to make sure all the rest of the inventory is moving as well, right? And so that ability to sort of look at inventory management as a tool is important. And Nicole, I know you got something to share on this.
I know. I was doing the finger, if y'all know what I mean, when you're in church and you hold your finger up. So really quickly, I wanted to say a couple things. First off, if you have a lot of inventory sitting on the shelf, that's just cash, and that is depreciating. You're less likely to actually sell that inventory the longer you actually hold on to it. So the one thing I want to share is business owners often get a little bit hesitant when it comes to discounting items. I just have to tell you from experience, there's a business owner that I work with. She actually sells clothing items, jewelry, and so forth. She was like, I don't know if I want to discount. And guess what? It cost her, let's say, $5 to actually, purchase and make that item. She was selling it for $20. I told her, you have to discount it. Even if you got $5, you're breaking even on that particular product. So you have to think about, if it's been sitting and it's stale, would you rather get something on that item or nothing and have it go to waste? So I would just say the inventory management is a huge component if you have a product-based business. And on top of that, we always typically recommend somewhere between 3-month inventory, right? Like, you get too far out, then potentially there are some other challenges that you have. So it's a balance between having enough to sustain your business in the near future, but not too much that it's salvaged, or the trend changes, something happens, and now you have all this access. Inventory management is a huge component if you have a product-based business.
We're going to move to the next slide as we wrap this part up. We don't need to go through the example. I think Nicole gave a great example. So marketing, focusing on your marketing spend, on the initiatives that are most likely to deliver. What does that mean? That means that if you're doing social media, and you might be doing e-blast, and you might be doing some local advertising, you've got to figure out which ones are bringing you in the most money, bringing in more customers to spend with you, so that you can devote more resources to that and less to other things, right? And a lot of that is a little bit of trial and error. But if you're able to sort of look at what's my spend across, say, these 3 categories, you can make that the same, right? And so you're able to sort of see what we call return on investment. What is that going to look like? So say you spent, $250 on social media, $250 on e-blast, and $250 with, say, a local newspaper to be able to push your goods out. As your customers come in, you want to know how they heard about you. So whether they're going to your site or whether they're coming to see you, you want to know how they heard about you. So this is your campaign strategy, just really trying to understand, where people are hearing about you, what products they're focused on, what's bringing in the most revenue for your business. And so just kind of analyze that. You can do that, on your own. It doesn't have to be a fancy spreadsheet to do that. But if you just kept, just a tally sheet, so that people let you know, or if you've got a form, online when they're checking out, and they let you know how they heard about you, then you can determine which areas are the most successful for you. So that is another way of being able to really minimize your spend, but maximize your return on investment.
And the one thing I just want to add as you go to the next slide is just making sure that any marketing that you ever do for your business ties back to a sale, to a purchase. So if you do marketing and it is on social media, making sure that your website or however it is that people can contact you to make a purchase, it is clear, it is concise, and it is there. Because ultimately, I think the marketing piece is always good and it's necessary, but the goal is for them to make a purchase. And if not today, you want them to have that option in the future. So it's always going to be tied back to the actual purchase of your business.
Okay. And so we've sent you the link to the workbook. So hopefully you all have that. We're going to keep moving past this example into part 4, where we're talking about how do we make cash work? How do you make cash work for you? And so as we start to begin talking about this area, we can go to the next slide. There are key areas of you recognizing how money is moving to your business, right? The next slide really begins to outline the importance of where things are happening. So we talked about that cash flow analysis tool. We're going to share that in a minute again so that you see it. But as we talk about what's happening in the next piece, one of the things that we want to do, and we'll give you a couple of examples around this idea of leveraging and understanding how cash is working for you. The idea here is for you to really get a good sense of where you're spending your money. That's the most important, I think, lesson that we take away from this, because the less that you're able to spend, the more money you're going to make. And that's really the bottom line. At the end of the day, when if you're going for a loan, if you're looking for additional support, a bank wants to know that you got your cash flow moving and you're able to pay your bills, right? They also want to know that you're going to have some money in the bank after you pay them. So you want to make sure that you've got all these things in alignment in a way that works well for you. And as Nicole's talking, I'm going to share my screen with that tool so we can talk a little bit about that as well.
Perfect. I feel like we love tools here. I think tools is really that missing link to getting you actually in the action of progress. So that's what I like to think of it as is that's the missing link. So we're going to be pulling up the cash flow analysis tool. We shared this in part 1. So here in this last section is really about the outflow. Yay, tools. Thank you, Kim. We love the tools also. So really what we're going to do is be doing the input for the outflows. So when you think about the outflows, what are you paying out for your business? So we talked about vendor relationships. What kind of purchases are you making? Let's just say napkins, utensils, so forth. That's going to be, something that you're going to put in there. Your outflows are going to be some of your other expenses, your payroll. How much are you paying for your employees, or even for other expenses as well? Some of your overhead costs. So we like to say, think about all the things you're paying out that's coming out of your pocket, and making sure that you use it in this tool. So when we did the inflows and then you do an outflow, you'll have an analysis. So I see that Elisa's already sharing her screen here. So we'll just do one inflow and then we'll do one outflow. Then that way you can see the analysis and comparison. So we'll do the drop down where it says category, and we're on the inflows for everyone. And we'll just say, the sale of your product for the inflow. Yep. And then you want to just put a description. We can just put, our cakes, that's the one thing that's top of mind, only because I was just eating some cake earlier from a business owner. It's 12 o'clock here, so it's lunchtime. And then for, the frequency, we're going to do that drop down, and we're just going to say, it's going to be fixed monthly. And let's just say, the amount that we have is going to be somewhere around $5,000. And so after we do that, we're going to go ahead and click add. The best thing about this, I just have to share, is like, if you notice, Elisa didn't have to enter any commas, any symbols or anything. So it's meant to be a really quick, input. So now we're going to go to outflows. If you want to click on that top
Yep,
link up
I
there.
will. I just want to show folks, like,
Oh, sorry.
here's
Yeah.
here's the info, here's where we put it, so you can see it. And it gives you
Yes.
options to delete or to edit as you see fit. So if you wanted to go back and revise this, you don't necessarily have to start scratch.
Yes. And so then we're going to go ahead and click outflows here. And then we're going to do a category. And then we're going to do the actual, I see utilities. We could do the utilities for this one. And we could just put overhead costs, because the utilities could be, your water, your garbage, so forth. And the frequency is going to be fixed monthly as well. And then I'm gonna say that this is around 8,000, right? And we're putting this here because we want to kind of show what that comparison looks like when you have. Yes, and we can continue to comparison. So I only wanted to share this specifically because this is a close scenario to what we had for a business owner. So, they may have thought they were making really good on sales, but after they started to put in all the money that they had coming out of the business, they realized that they were going to be coming out negative over the full year. So the reason why we want to put this is because we want you to know, even though you may say, like, my sales is going good, I made more than I did last year with selling my cakes. Well, how much did you spend? Right? So it's not just the inflows, but the outflows also is going to be that other critical component to do that comparison for your business. And then also there's a thing that says cash on hand. Oh, at least I already went to it. Yes. And so you want to put that. So where did you start off for the beginning of the year? Did you have $10,000 in your bank account? So you can also put the starting place for your cash on hand, and then you see that number kind of go down a little bit, right? So having that cash buffer is also an important piece. But just wanted to share these this tool with you so that you can actually go in and put all that information. And it's really quick. It took us literally 30 seconds. If I wasn't doing all the talking, it would take you 30 seconds to add in those inflows and that outflow. And we also recommend you do this on a monthly basis. You may not see anything drastic if it's weekly or bi-weekly, and that may be too frequent as a business owner. But as you evaluate your finances, you should also be evaluating your inflows and outflows on a monthly basis. And if not you, and you have a bookkeeper, make sure that they're doing that and they're actually sharing it with you so that you can look at the trends happening over time.
And I would also want to mention as well, just 1 minute, guys. I also want to mention, my phone's going off, I apologize, that again, although we're doing this, and you can go back and watch this webinar too, you also can use the demo. So there's a way for you to also sort of see what's happening, just clicking here and running through it. So again, feel free to review this this webinar video as many times as you like. But the tool, is so easy to use. It also allows you to download what, your particular projection. It lets you print it out, lets you revise, as you can see. You can start all over again. So just a very, very easy tool to work through, to run through, to be able to give you what it is that you need to make the kinds of decisions you need to make for your business. Questions before? It's another place I wanted to go in here.
We're all about the tools. So even if that was a really quick walkthrough, if you could just go in and just try it, I think you would actually really see the benefit. It comes out with a whole chart. We did something really simple, but it comes out with a pie chart and everything. And we always, I say, I've seen business owners like save that month over month, and they're able to see the trends without having someone trying to build a system for you to do it. You already have one for free right here.
The link to this is chase.com/cash flow analysis. I don't know if you can still see my screen where it says Knowledge Center. Can we see that? Okay.
Yes.
So I wanted to, if you notice, there was a back button. that takes you in the Chase for Business. And I wanted to at least share this resource center for you because there's lots of information here that's also helpful to you. Besides what we're doing is we're doing our Chase Advancing Black Entrepreneurs piece. So again, being able to have that tool backing in and then looking through the Knowledge Center for other particular topics like how to calculate your working capital. It'll bring you right to that.
And then I wanted to add one quick thing that I saw
Sure.
a question for in the chat. Someone asked, have you seen people from QuickBooks extract from QuickBooks into the analysis
into
tool?
the tool? Yes.
Yes, so I have not seen business owners utilize it in that way. But the one thing I do want to say is if you are able to extract from QuickBooks what the outflows are, at least on a monthly basis, you can take that out and put it into the tool. And even if you wanted to put it as a lump sum, because QuickBooks has all the breakdowns for you, still be good because QuickBooks currently doesn't give that analysis that this tool gives you. So if you can extract the number, even if it's in lump sum, put it in there and then do that month over month, you'll start to see that trend. But just wanted to answer that question.
I think that's great. Let's see, do we have any others? We don't. There is one other, and maybe you can give me the link, Nicole. It's the page that has the form where people can request a consultant. So depending on the size of your business, you can also work with a Chase consultant for free. If you've got lower annual sales amount, you'll get a specific amount of time. If you're a business really on a huge trajectory, you'll get a little bit longer period of time, but you can work directly with the Chase. And so do you know what that link is offhand, Nicole?
I'm actually going to put it in the chat
great.
right now.
Terrific. Because I want to share that with you as well. We want you to be able to get some free counsel to help you through this as you're looking at it. And again, that's why we want to really, help share the tools. Let me see if I can get into it. Can you see my screen or do I need to?
I can see it.
Refresh? Okay, great. This screen takes you directly to, and it's within the Knowledge Center itself. So we probably could have gotten to it in the Knowledge Center. But it basically shows Chase's commitment to helping minority business owners achieve their goals. That's why this program, number one. And so things like navigating your cash flow, which we're doing today, some of those things are sitting on this platform as well. But obviously, we want you to listen to what we're sharing with you because it's the same info, and you get just such great moderators as part of it. The mentorship piece is the area. Is this the one?
Yep. So yes. That's the one right there. So you put your information in there, first name, last name, email, so forth, and it routes you to the local senior business consultant. So for instance, I'm in the Bay Area, San Francisco, Oakland. If you were near me, then you would be routed to myself, but we have colleagues across 22 states. So we're in Atlanta, we're in LA, we're in Houston, Dallas, New York, Philadelphia, we're everywhere. So put your information in so that you can actually have the one-on-one support that allows you to actually implement the information that we're talking about in real time. So we highly recommend it.
Yep. And again, I'm just scrolling through this so you can see there's some business stories in here that are really inspiring, can help you stay on your track and kind of move forward. Sometimes it's great to see that someone else has done it to give you that confidence and inspiration to do it yourself. Other resources as well, as we mentioned before. So again, just, a great sort of smorgasbord of information that you all can use as business owners. So I'm going to stop there. And I'm going to ask you all if you have any questions before we go back to the PowerPoint. We're getting close on time, so I want to make sure we answer any of your questions that you have.
And while we're waiting for questions to come through, I just like to share if you're interested, start with that first conversation with the senior business consultant. I think that's really where you really know how you could actually be helped as a business owner is by that first discussion, and you get to hear that person's expertise because every individual has a different background. I came from philanthropy, so I did a lot of small business design, but other people have been really high achievers on like the sales side. And so they know all of the tools that you need as a business owner to grow your business as well. So start with the first conversation, and I think that will give you the guidance that you need to decide from there.
Absolutely. And so what we're going to do, I think there's a poll, Lisa, that we can pull up right now, that you can take, that you all can participate in right now. So we're going to launch that poll. And so if you've gone through part one and part two of this, would love for you to be able to let us know, are you feeling more confident about managing your cash flow? And so you've got answers everywhere from no to yes. So we'll give you a couple of minutes Lisa will launch it, and we'll give you a couple of minutes to complete. So you can launch it now, Lisa.
And while you're also filling out the survey, you can also put a question in the chat. I see that the survey is now live. You can put a question in the chat if you're like, hey, I really want to know about this component, and I'm happy to share.
Mm-hmm. You're welcome, Rachel. Rachel, you're welcome. We'll give it another 30 seconds or so. You're going to let us know if we did our job well, right, Nicole?
Exactly. We want to know. And there's no feedback, like feedback in the moment.
That's right. Absolutely. Can we talk about managing rising inflation? I'm going to give that to our expert here. Nicole, do you want to talk about
absolutely.
that?
Yeah, absolutely. So as we think about rising inflation, so the cost of doing business when it comes to the input of goods or just the cost of labor is already increasing and rising. So I would say for business owners, this is really where you start to negotiate a lot of those relationships that you have. So one, you have to really think about negotiating that vendor relationship for pricing. Because the prices are increasing and you want to make sure that you can still maintain those relationships. And I think transparency is going to be key. Like you have to be able to say to your vendors, things are going up, but I really need to know how we could really make this still work when it comes to the quantity and the price. Two, you also have to evaluate your banking relationships. So not just with Chase, but any banking partner that you do have. How much are you paying in fees? Are there any ways that you can actually have those things reduced or removed just for the time being? You can always go to your banker, which is why we always recommend you have a relationship with your financial institution and say, hey, I'm experiencing some challenges because of the rising cost of doing business. Can we waive the fee for the next 3 months? Some of the other things you have to do is really evaluate the work of your employees so that you're not paying out extra. What is the extra kind of meat, the fat, I would say, that is not needed at this moment for the business to still function in the way that you provide quality service for your product or service. So I would say this is the time that we're starting to see business owners not necessarily cut back, but be a little bit more conscious about what they're spending on. And if you have a good customer base, the one thing we like to say is incentivize those customers to come back to you so that you keep at least your main core revenue at the same amount. Obviously, we want it to go higher, but you want to make sure that you're not losing any customers during this time where things are going to be challenging. So keep your customers close and start to evaluate all those partnerships where you feel like you're paying out any type of funding.
The other thing I do want to mention is that recently the Inflation Reduction Act was passed in Congress. And so it'll have some impact on small businesses. Just need you to mute your line. It'll have some impact as it relates to small businesses. And some of that goes to, negotiating healthcare costs through Medicare. really ensuring that Affordable Care Act premiums are affordable. I understand that very, very well. It's you want to be able to have affordability and also be able to get the amount of care that you need, particularly if you've got prescriptions or you've got, some smaller procedures and things that need to be done. That is effective for a business owner. And so just know we'll share that link as well. And information that we send out, just so you know more about it. Lisa, if you want to give us the results of the poll, that would be great. Okay, so I'm liking what I'm seeing, Nicole. I'm liking what I'm seeing. So the person who's not sure, what we'd really love you to do is if you utilize our programs at usblackchambers.org. Let us know what you need help with. That's what we're here for, to be able to connect you to the resources that are going to help you be able to manage your business effectively. You don't have to do this alone. There are tons of resources out there. And a lot of times I know we struggle through all of this, but you don't have to do that. So just know that that's why we do this. That's what we're here for. I'm feeling confident you all are feeling a little bit better about it, because the more that you understand the importance of cash flow, not what's on your tax return, although it should reflect it, but understanding how your cash flow works and being able to communicate that to either a vendor or a lender down the line, or at least knowing that you're making money, right? A lot of times we're doing a whole lot of work and we're just not making money. And so feel free to email your questions or concerns to us, and we will connect you with those folks like Nicole, who can help you.
And I just want to say really quickly, thank you everyone for sharing your feedback. I did add my email, the one who was like, I'm not really sure. Like, if you wanted to talk through your specific business, even if you're not the Bay Area, you can email me and I have a conversation with you too, because I think sometimes each business has its own unique challenges. So just want to give you the people resource as well.
Absolutely. And I do want to remind you, there are links in the chat. Please copy those. I usually copy them and put them in my browser, so each window comes up and you have it. After this meeting is recorded, and again, you'll be able to view it on our YouTube channel. And before we close, since I don't see any other questions, I do let's do this question, because this is for everyone. You heard us talk a little bit about cash flow strategies, everything from inventory management to payroll, to lease strategies, marketing, and the like. Is there one that you would want to start with within the next week to help you better improve your cash flow? And feel free to put that in the chat. And while you're doing that, Philip, if you wouldn't mind, can you let everybody know what's coming up at USBC? I think you're on mute.
Hey, hello, can everybody hear me okay?
Yes, we can, sir.
All right, and then can you see me okay?
And we can see you.
All right, great. If you like this programming and other programming just like it, we have tons of programming around Chase ABE, around financial education. At USBC, we are committed to helping Black business leaders achieve stellar performance and growth through entrepreneur and business management training. Hence, we deliver quality educational opportunities and professional development resources that help our member businesses and other Black-owned businesses grow and succeed. So we encourage you to go out and visit our website at www.usblackchambers.org/webinars, and I'll share the link with you in the chat. We do have some amazing training coming up with our Grow with Google partner. They're going to have 4 webinars take place in October. We also have some pretty good content coming out from UPS, one of our partners. They're going to have some good information for us. We have a panel discussion that we're going to be doing with one of our partners, TikTok, that we think that you all will find very interesting as well. So be on the lookout for these different opportunities that are going to be coming your way for October. And then we have some more training coming up in November and December as well. We also want to encourage you all to consider, we actually want you to go out and register to attend our Buy Black Conference, which is taking place October 19th through the 21st. That's going to be taking place at National Harbor in Maryland. This is a really amazing conference for Black-owned businesses to come and learn about different opportunities that are coming your way. Also, network with others, network with your peers, network with decision makers from major corporations. We'll also have a matchmaking event that is going to take place prior to the Buy Black Conference. You can register for the Buy Black Conference at buyblackcon.com. And so I'll share that link in the chat feature as well. So we're real excited for you all to attend this program today, but we want you to be on the lookout for additional programming coming down the pipe in the last quarter of 2022. So thank you all, and I'll turn it back over to Elisa and to Nicole.
Well, thank you, Philip. I appreciate you sharing some of the great work that's going on at USBC. Jerome, I think that's great that you're going to be starting at marketing where you need to focus. So again, if you can, determine the channels that you're using from your marketing strategy, figure out your cost, and then figure out how people are hearing about you, I think it's going to really help you dedicate your resources in the right way so that you will definitely see some revenue growth. And then Maggie, I think I believe Nicole answered this, but we'll answer the question again. Is a Chase software program link to QuickBooks? So Nicole, I'll let you answer that again.
Yes. So the actual software for QuickBooks does not link directly into the cash flow analysis tool. I was recommending that you extract the numbers from QuickBooks. You can do it in a bulk way, like the outflow and the inflow, and put it into the tool, and at least do that once on a monthly basis. If you use the tool just once, you'll realize it takes you maybe 30 seconds to input that information so you can see the trends, since QuickBooks currently does not provide that service.
Yeah. And so with that, we're going to thank you. I think that's our next slide coming up. But we thank you all for coming today. We've gone through our questions. Be sure to register for the Buy Black conference. Really, it's a great conference to attend, particularly if you're in the DMV area or DC, Maryland, Virginia area. It's besides, all the people that you kind of get to meet there, it's just a great experience overall for your business. And there's lots to learn. There's lots of contacts to make. So we're hoping that you can join us there. But if you can't, you can still follow us on social at US Black Chambers or USBC CEDC. Either way, you'll still get to participate as part of that journey moving forward and keeping in touch with a lot of the work and things that we're doing to benefit your businesses. And so want to thank you again, Nicole. It's a pleasure, girl. Thank you so much.
Thank you. Thank you for having me. Thank y'all for indulging in my stories here with my business owners.
We appreciate that. Thank you again for tuning into part 2. We broke it up because we thought it would be beneficial to you really being able to dive a lot deeper into understanding how to use the tools and how to navigate your cash flow effectively. So thanks again. Have a great rest of the day.
Bye, everyone.